Falguni, thanks so much for joining in. You know, it's great going in India for sure. I mean, it looks like a fantastic run-up. But how do you weigh the Indian markets versus the concerns or the world economic contours at this point of time?
I think India is very well positioned. I mean, as you can see, all of us can see that Indian growth is very strong. We are seeing a pretty robust growth. Of course, last quarter results have been a bit disappointing. Against expectation of 24% year-on-year growth, we have been only at around 14%, and quarter was a disappointment. In fact, it was a degrowth compared to previous quarter. But I think India is set for about 20% earnings growth for next 2 years, which I don't think any other economy can so confidently claim. And our growth is very it's very widespread in terms of, you know, it is spread through all over India, also in terms of urban, rural. So it's a very robust growth that India is experiencing, and I think investors are very focused on India. Of course, valuations have to be right because they have seen a lot of volatility in the world, and you can't assume there won't be any going forward. So they are, you know, valuation is an important consideration for investors, but I do see very positive market, and I also feel that the M&A, which is, you know, financing has been very strong, but M&A will also pick up, you know, as we go forward.
But Falguni, don't you think valuations at this point in time are getting a bit too hot to handle?
You know, it depends on whether you're considering X energy or not, but I think the valuations, including energy, are around 16 times 2011 earnings, 16.9, I think, little around that, 16, 17 times. So they are not in that heady zone of 20 times, and also I don't think this is a market which is at its bullish top or anything. I think the valuations are fair, and they do build in 2011 numbers. Our own estimate is that 2012 target, you know, our Sensex target is about 15% ahead, which I think is a conservative target. It can be higher than that. So we do expect around 20% growth year to year.
Falguni, the Q1 GDP has been resilient, but earnings have been a mixed bag. In fact, I'll be honest, they have just been very disappointing. How do you think the second half will pan out? Would it be harder to deal with than what we've experienced till now?
The last quarter results were a bit concerning. And what is happening is that there was a lot of sum of part valuation that investors were paying attention to, and that was assuming build out of infrastructure projects, it was assuming build out of new projects that every company is undertaking, and many of these are a little bit behind schedule, if I may say so, and that's why there are certain challenges of delay in capturing that value. Having said that, the projects are well, I mean, they are not just on paper, they are well financed, they are well being executed, and it's more in terms of timeliness of their completion which is affecting the earnings outlook. But I think overall India growth story is strong.
What are foreign investors telling you at this point in time? And in terms of fund flows, are things picking up?
Yeah, I think investors are, the net fund flow is balanced. It's not hugely positive, but that's because even Indian corporates are investing abroad. But I think in terms of basically the investors, they love the Indian consumption stories, India growth stories in most of the sectors like consumer sector and many others. These are fairly richly valued. They also like banking, technology, as well as infrastructure stories. So yeah, I mean, they do. I mean, they are doing their analysis, their numbers pretty well, but they are quite excited about prospects for Indian companies.
Falguni, how do you see the pipeline for large deals from here on, and which sectors will be looking to buy new assets, or say maybe enter into new geographies, or would it essentially be that fundraising across the sectors would be the dominant theme?
I think fundraising will dominate. M&A will pick up from how active it has been historically, but it is part of the phase of India growth story where if the growth is so strong, there is a little bit of hesitancy to exit from Indian promoters' perspective, and as a result, a lot of possible M&A gets converted to either joint ventures or greenfield projects by global majors, and that's where the level of M&A activity is much lower here than we see in the West.
What about telecom as a sector? You think that will drive M&A interest?
I agree. I mean, yes, telecom is where the consolidation will be, and there will be some activity because of the sector is going through pretty tough challenges, and that tends to be a time when a lot of thinking goes on, both in terms of domestic consolidation as well as maybe exits from international, exits giving opportunity to international players. And the market is very large, and India is a very important country for any global player. So I think the sector is ripe for M&A activity.
Let's also talk about IPOs, Falguni. I mean, are you disappointed with the PSU IPOs? The latest being talked about ONGC, IOC now in the last 12 hours. So there's a lot of the pipeline is very strong. The performance maybe hasn't been. Are you a bit disappointed?
No, I think PSU, except for fees, which there are none in the PSU mandates. However, as far as the PSU companies, the companies that government is bringing for divestment, they are all very exciting companies, from Coal India to Hindustan. Most of the companies that government is putting on the divestment map, like SAIL is doing a follow-on. These are all pretty interesting stories. So in that sense, it's exciting.